legit. Anything you want.
Have the Chinese lost control? Something is going on with gold, the yuan, and the peg. Something has snapped this week as the People's Bank of China appears to have lost the ability to manage the gold peg. Here are the details from Arrowhead yesterday, when looking at a chart of gold priced in yuan, level which the PBOC appeared to be far more concerned about than the yuan-dollar exchange rate. We asked if the Chinese central bank had lost control because after managing to egg its currency at roughly 8,300 yuan per ounce of gold in Q3, something snapped this week when the PBOC appeared to lose its ability to manage the peg. Whether due to desperate liquidity needs elsewhere or defending stocks as they begin to freefall, the yuan suddenly plunged back to 8,500 per ounce of gold. And, as shown below, this was a significant breakout weaker for the yuan in gold terms. Just 24 hours later, the topic of the yuan gold peg reach prompted Nomura's Bilal Hafiz to observe that anything is going on in CNY. As the Nomura strategist writes in an email to clients, even though the dollar has not moved much against the euro or yen today, Chinese yuan is falling to new lows against the dollar. Not only that, but the tight gold-CNY relationship I flagged last week appears to breaking down with CNY much weaker than it should be. Echoing what we said yesterday, Hafiz observes that his may suggest a regime change of weak CNY is underway by the authorities. Alternatively, it could be that the CNY was held artificially strong ahead of the U.S. Treasury semi-annual report on currency manipulation to avoid any conflict with the U.S. and is now moving to its correct weaker value. The weakness could also simply reflect poor CNY fundamentals asserting themselves. Whatever the cause, Hafiz says that traders should watch USD-CNH and USD-CNY closely. The previous recent highs were 6.99 CNH and 6.965 Chinese yuan. Specifically, when looking at onshore trading volumes for USD-CNY, the Nomura FX trader notes that 0.95-6.96 is an important zone, where activity becomes heightened and that breach of 7.00 is on the horizon is therefore coming to fruition. It sure is. According to 6-month USD-CNH forward, the Chinese currency will slide below the PBOC headline against the dollar sometime in the first quarter of 2019, perhaps sparking an even more violent round in the US-China trade currency war.
Gold price may top $1,300 in 2019 as investors seek sanctuary from the deteriorating trade war. The price of bullion could average $1,350 an ounce in 2019, compared with this year's average of $1,285, according to Bank of America Merrill Lynch. Gold is set to surge over the next year as concerns deepen about the widening U.S. budget deficit and a tariff-driven trade war starts to damage the country's economy, according to Bank of America Merrill Lynch. Bullion could average $1,350 an ounce in 2019 as corporate tax reforms worsen the U.S. fiscal balance, Francisco Blanche, head of Global Commodities and Derivatives Research, said in a phone interview last week. Spot gold traded at $1,208.70 on Friday and has averaged $1,285 this year. We're still pretty constructive longer term on gold, because of worries over the future of the U.S. economy even though it's performing relatively well right now, said New York-based Blanche. In the short run, the effects of strong dollar, higher rates dominate. But in the long run, a huge U.S. government budget deficit is pretty positive for gold, he said. The warning over the budget echoes billionaire hedge fund manager Ray Dalio, who predicted this month that the U.S. economy is about 2 years from a downturn, which will see the dollar plunge as the government prints money to fund a swelling deficit. Goldman Sachs has also joined the chorus of bulls, seeing gold at $1,325 in 12 months. Bullion has been building a base around $1,200 after 5 months of losses, the worst run since 2013. The Congressional Budget Office has predicted the U.S. administration's tax cuts, when combined with new federal spending, will push the budget deficit to $1 trillion in 2020. That's forced the U.S. Treasury to lift note and bond sales to levels last seen in the aftermath of the recession that ended in 2009. The tax changes are lowering the revenue base, said Blanche. That means the Treasury has to borrow more, so that puts pressure on rates, which in the short run has not been good for gold, he said from Hong Kong. However, in the long run, it basically begs the question, can this go on for much longer? Can the U.S. borrow its way out of the next downturn, and at what cost? In the near term, the Federal Reserve is the main driver in determining gold's path. While an interest rate hike is widely expected at the next policy meeting, which ends September 26, the market will scrutinize the statement from the Federal Open Market Committee for any concerns about the threat to U.S. growth posed by trade tensions, which could change tightening expectations, Blanche said. The U.S. and China announced tariffs on $200 billion and $60 billion in each other's goods last week. President Donald Trump has threatened duties on a further $267 billion of made-in-China products, and signaled the trade war will not end anytime soon, telling Fox News it's time to take a stand on China. Eventually the trade wars are going to come back to bite the U.S., said Blanche. It could take longer, it could take shorter, eventually it's going to happen, but maybe the Fed acknowledges it sooner, which is what people are going to be looking for in terms of getting more bullish on gold. We know that trade wars are not good for the economy,